So, number one, this is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor. Do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take the independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Please do your own research. And shout out to everybody that pulls over in the street and says that to us.
Yeah. And it's UNEST, UNEST.
There we go.
That's the one that he was talking about. All right, Ian, the floor is yours.
Perfect. I appreciate you guys so much. I'm gonna need some kale chip wrap snacks.
Shout out to Cardi B. She's on the. She
got like 4 bags.
I need a bag.
All right, let me know if you guys can see my screen.
Yeah, yep, we see it.
Get your pen and pad ready. I'm not going to play with you today. Let's get right to it. The 33 secrets that you need to know to be a great investor in the market. Disclaimer, do not copy, remix, reproduce my material without express written permission by me. I love you guys. Don't remix my material because I don't want my lawyer to, do what he has to do. Subscribe to my YouTube. Just look up Ian Dunlap and then go to joinredpanda.com for exclusive content. If you want to join the stock club to get the greatest entries and picks on the planet, you can do so. You'll get the 4 best stocks for your retirement, the best places to get in and out, called by me, additional entries from the algorithm Athena, the best growth stocks to invest in, the 2 best places where to get into the market, 28 bonus picks on a year, a 10-minute daily call from me, and some of the greatest gains that you potentially could get hypothetically. Trading has considerable risks. Please consult your advisor. If I've made you some money from Stock Club, put fire in the chat, please. Now, let's not disappoint the Lord. Now, I know some of you asked for a financial blessing in 2021. Put yes in chat if you've executed. If you have not, please stop playing. After Market Mondays, we will have our Stock Club call at 9 p.m. Central for Red Panda members only. If you want to join, please join Stock Club. June 21st, for those of you that joined last year, who came across me through the fellas, you'll have a chance to renew for the same price of $297. Now, for those of you who are like, hey, can I get the same rate? Nope. Just for them. Those who joined in March and April, you can join at the same rate. You're locked in, grandfathered in. I love you so much. And for those of you that have been with me for years, when it was $20 a month, you're locked in for life, so no worries. June 28th, we will have a Stock Club flash sale. I am not sure about the price. No, I don't. It won't be super cheap, but the value is there. If you don't want me to limit these gains, I can't limit the price because I want less people in and more people in that are going to execute. So June 28th, get ready for that. The S&P 500 and NASDAQ hit all-time highs today. There's nothing else to say, nothing else to teach, nothing else for you to learn. Don't need more books. You don't need to go look at the galaxy and see how Orion lines up with Chichen Itza in Mexico. Execute and buy. That's it. The entire thing. You can close out after this. We don't close out for the views, but 2 tech, S&P 500 or QQQ, IWM, IWF, 2 index funds, and 2 technology companies. I love Apple and Microsoft because they provide safety. Okay? Write that down. For those of you who are new, 2 index and 2 tech. And the truth is, most of you don't want gains. You just want to gamble. And some of you have even gotten off the gamble coins that have been out there. But if you want security and safety, this is one of the easiest plans that you can follow. The hardest part about it is most people never follow a plan consistently year after year or week after week when it comes to investing. The top lesson from last week's episodes, kudos to Jorge, who's in Dream Team now because of his win. The formula for explosive gains is this. You need a high amount of shares in a company that you love or have a deep conviction in. You have to hold it for a long period of time. Luckily for him, it didn't take that long, but you have to hold for a long period of time, and then you need a high volume stock that other people are behind. Please write that down, because what sucks is when you get into a move and it has a tremendous run and you don't have that many shares in it. So these are the 7 lessons. I talked with a brother this past Saturday. Stock Club members, you guys will have that in about a week or two. And he made $230,000 on AMC. Lesson number 1, super concentration. He only has 6 stocks in his portfolio. Truth be told, you cannot do an adequate amount of research on 29 assets in your portfolio. You can't. 6 maximum. 4 is ideal. The fewer companies that you have, the deeper you can go into them and understand them a hell of a lot better. Please put 6 in chat. Lesson number 2, he bought it in August. So before the hype kicked in on AMC, because he works in the music industry and he's a business owner, he goes around to a whole bunch of cities and he was like, I remember what it was like prior to COVID. So unless they absolutely go bankrupt and go out of business, I know at some point this stock will revive and come up a little bit higher. So he did actual on the ground, old school research and compared the data of how many people went to the movie theaters before and now that this country is opening back up a little bit to what it could be now. Lesson number 3, buy a large quantity of shares. Once a company has met your parameters and your expectations, you have to buy a large amount of shares to make the investment worth it. Lesson number 4, I think he started thinking about the position maybe a year prior. He's only been in it since August, not even a full year, but he was willing to hold it a year to see if it would even get to a point where it would break even in his favor. One of the biggest mistakes I see a lot of people make, you guys want to flip too fast. And it's often because we made bad money decisions prior. So now you want to erase 10 or 18 years worth of mistakes in 2 years. No. What happens is you'll hold something for a year and it'll take off and it will build your confidence to then follow a system in other areas of your lives. When it comes to money, money is all about systems, automation, and having an elite edge in something that other people don't have. Please put elite edge in chat. Lesson number 5, he used the previous high going back to 2016 of 35 as a potential exit price. He bought in at 4. So even if it never shot up to 70, he got in at a good price. And then almost had a multiple of 9. He's risking 1 to potentially almost make 9 on the investment. Is that a good risk to reward ratio? I'll tell you guys, minimum risk 1 to make 5, 1 to make 10, 1 to make 25, 1 to make 50. This is a good risk to reward parameter. Lesson number 6, change your mindset from working for money to letting your money work from you. If you're always saying, man, I'm tired of working and I'm tired of having to give all my time in exchange for you, once again, you have to let the greatest set of entrepreneurs to walk the face of the earth ever work for you. Are you better than Bezos? Are you better than Tim Cook? Are you better than Steve Jobs when he was living? Are you better than Elon? You have to factor these things in and say, if you're honestly not better, or even in this case, do you have better systems, infrastructure in place and an edge in your company versus another? If not, you need to invest your assets into those companies in which can win for you. And lesson number 7, you can make trader money from long-term investing if you have a sizable amount of shares. Everybody want to drag you down the lane of investing, and then I trade futures is what I do. I'll arguably bust damn near anybody's ass when it comes to trading, right? Anybody can lose. But the real leverage is to have the money and assets working for you. All the big money is in long-term investing. Here's how you know. You never see anybody that has a net worth higher of $50 million talk about actively trading, with the exception maybe of Paul Tudor Jones and maybe 65 other people. Type in chat, let the money work for you. If you own the LA Lakers right now, and I've talked about this before, if you owned, or if you had the chance to own, shout out to P and Migos album came out. If you had a chance to own Quality Control, would you own it for one day and trade it, or hold it for 10 years? I get so frustrated with people taking you down this aisle of saying we're all trades and you can make more money, but the downside risk, because if you're wrong one time and it skips your stop, then what? We have a parabolic day and we bleed down crazy and the volatility is incredibly high. Your broker may not even be able to answer your phone call. Go ask them if they're free first before you take advice from anybody. You don't got to listen to me because I'm good. Red Panda, Dream Team, good. Snipers, good. Execute. If I made you money, put yes in chat. Malls will adjust to becoming mixed-use spaces over the next 4 years. So you know, Forever 21 is dying a slow death in this. I've been a lot of slow singing and flower bringing for some of these retail companies, right? But they will start to use that space as commercial space, office space, and they'll get a lot more creative in some of the things that they'll do. I won't touch on this deep, but Russia has dropped the US dollar. Initially, it was a tax on the election, but we all know in order to win a war, and at the end of Against All Odds, rest in peace Tupac, rest in peace Afeni, he had a quote. He said, "Now I have my money, right now I want war." In order to engage in war, you have to have a monetary edge on your competitor. This is why I kept telling you guys, if other assets that we are being driven into are not American, what downside risk does that have for us as a country and an economy? I won't tell you my theory on air. I told some of you privately. But if another entity, and there's another asset owned by another country, becomes the most popular asset to trade and invest in, what would that do to the dollar? And also, if electronic vehicles become the standard, and then we come off the dollar because of oil drops, then what happens to us? Death will be delivered. But everyone loves crypto so much. You have to think deeper. There's a game inside of a game. And if the VIX hits $10.89 this summer, oh baby, we're going to have an aggressive slides. Please start marking off the places in which you need to buy the companies that you love right now. And this is the big secret of all of investing that no one wants to accept. The actions that you've taken over the last 3 years have gotten you exactly where you are today. That's it. No debate. If talk is cheap, why is everybody so engaged in debating? Because people want to be seen opposed to being rich and wealthy. You got you here. So if you don't like yesterday, my review process to get ready for the week was to watch 89 videos. That's me already knowing what to do and what my thesis is. If you do not like where you are, change the action that you take on a daily and weekly basis to get an edge in the market and your business and to have freedom. If you like where you are, please continue to find ways to add an advantage to what you're currently doing. Red Panda Stock Market Study Blueprint. I want you to study the top 20 futures every single day. Study the top 50 stocks based in the US market. I want you to study the top 51 through 300 after that immediately. And then most importantly, invest in 2 index funds and 2 tech. Even in downside risk, quote unquote rotation. So it was meme stock, crypto, consumer cyclical, banking. If you're not actively looking at the market 8 to 10 hours a day, you're not even going to be able to see when the rotation begins to happen and marking off your prices in advance to know where to get in. And then when your tech is bleeding, everyone's telling you, well, the hedge funds are now rotating into palladium. No, the indexes will give you a hedge because you have diversified assets in your portfolio. And then when they go back up, as they did today, you can participate in that upside swing of the market. Stick to your plan. And the higher your execution is, the lower your hate and envy for others will be. The people that are winning and that are making money, no issues. You notice all the traders, investors that are really good, they all get along. And then the ones who are not good and the gains are not there, always a rebel rousing. Stay focused. Your execution in these next 2 or 3 years will determine how things go for you in 2030. Jerry had a great question. So do the trades have little to no drawdown when you get in them? Does a good trade almost immediately go in your favor? So when I'm trading the futures market, I used to have a rule of 7 seconds. If it was not in my favor, if I was not in profit, I would look to get out. I've kind of extended that to like 20 seconds maximum. But when you're in a good trade, if you traded ES today and you're in a sniper group, on average, how long do you need to know before a trade is working in your favor? For me, that 20-second mark will be a great gauge. When you get into a good trade, you immediately should see some positive profit in your favor. If a trade is staying at break even or slightly negative for a minute to 3 minutes, I know the trade is not good. That's why I'm so focused on timing, top of year, end of year trading, Monday, Friday trading. You have to know what cycles which have the most volume. But for me, for sure, when I get to 20 seconds, if I'm not in the positive, I'm looking to lock in profit and get out with a little bit of profit to prevent from losing or getting out of the trade altogether. How to use Fibonacci tracements for entries. If you want me to do a full tutorial on this here on Market Mondays in the next couple weeks, put yes in chat. But I will say, use the time frame that I gave you to look at the stock and draw from top to bottom. And one area that you can get in is off the 20-6. I wish I can give you our levels in the dream team. I can't, but if you want me to do that tutorial for you, I'll spend an entire episode on that. What's the best way to determine entry and exit prices for stocks? We went over it. Go look at the Mark Cuban episode. I swore that I would never talk about the indicator again, so I won't. Go look at the Mark Cuban episode, but then you can use the 72. You can use the 200, the 50. You can use the 10 EMA. Great. And then also you can use VWAP for momentum. What are your thoughts on crypto being adopted in South America? I think it's a potentially innovative way for a government to get a financial edge. My thesis is the same, though. You should only have 1 to 8% of your net worth in crypto. What's a good entry for MGM? Stay tuned to the end of the show, and then I'll give the entries for MGM and a few others. What's a good entry for Baidu, and what are your thoughts on it? My thought on it is I don't love Chinese company as a primary asset to invest in, but I'll give you the entry towards the end of the show before we wrap up. But I like American companies, in particular American tech companies, more so than Chinese. What should be our second entry point when we're trading futures? This is a great question. So now that the summer is here, the volume is going to be a little bit lighter. And I was talking to P and Dom about this earlier, but you have to then, if the market consolidates, write this down. If the market has less volume or we're more quote unquote range bound, you have to use a shorter target. It's not about another entry. Use your same entry point, but use a different target. That's why I tell you guys, whether the market is going up a ton of points, only going up a little bit, or going up somewhere in between, you have to have targets according. But you can use VWAP as a secondary indicator. You can also use Golden Cross. Let's say use a 10 or let's say 14 EMA paired with a 20 or 14 with the 50. If it crosses above, you can look to go long, but it's really about having one target that will work in short conditions, one in long conditions, and one in mid range. Do you read 10Ks when researching the market? Never. For the companies that I love, the 5 companies that I love the most, and I've talked about them ad nauseum here, yes. For everything else, no. Technicals now have become a visual representation of what the fundamentals are. I don't go through the 10K, but just because I don't do it doesn't mean that you shouldn't. So regarding Apple, Microsoft, and the 3 others that I love dearly, I've tried to read every article that I could at least since 2000 about it. So I know the company front to back usually. If you have not read a 10K for a company that you love, you probably should. A few of you had a couple great questions, and kudos to you on Twitter who asked me about Benner cycles. It's not enough time today to go over it, but next month I want to go over it for sure. But I will tell everyone here, begin buying every book that you can on Benner cycles and look at the 20-year cycle more so than any other to see. You will notice something, however, there is a resistance point or an area of like maximum optimism, which is at the top. And then you have a bottom layer of maximum pessimism or support at the bottom. And you can see which years and which things begin to turnover, or could. And I know people often say that no one knows what the market is going to do or doesn't have a crystal ball. I do. But there have been people who have predicted when things are going to crash years in advance, and I'll show you an example later. How did you know that the price of Tesla and Bitcoin were going to drop in advance? When I say you need to go look at the market every day, once you're looking at the highs and lows, so I know for a fact when Tesla normally hits a all-time high in normal conditions, it's going to drop 50%. That came from me doing the work. It's not something that I read. Then the crystal ball, the spots in which I want to get into the market, I saw how high it was, and I thought this was going to happen 6 months ago. Remember when I was saying, hey, I think Tesla may drop down to 394, and everybody was like, yo, he don't know, he crazy, it'll never go. And then it took off, right? And I was like, yo, I was wrong. It didn't drop. And I'm still pro Tesla, pro Elon. But the people who were saying he doesn't know hadn't invested in it. If you were invested in Tesla pre-2020, it was a hard thing to see. And that's why it was very hard to put more than 10 to 20% of your portfolio into it, because the drawdown of 50% was too heavy. So this is experience. So I'm like, okay, they haven't lived through the cycle. The experience of looking would trump any noise that's out in the marketplace and out on social. So when I go through and mark my prices in which I want to buy, and those are the same prices that I give to the stock club, it was an easy correlation to see that it could come down to that place. The easy answer is just looking 8 hours a day at the market. I wish I had an easier way for you. How do you deal with the emotional aspects of trading? Literally just trading Monday, Thursday, and Friday and sticking to 8 trades maximum per week. Now I may practice more than that, but write this down. 8 trades per week live will give me peace. That's all you need. You guys can debate and do whatever you want to do. I don't care. You can do whatever the hell you want to do, but you have to limit the number of trades that you take and only trade during prime times. Because now when you're bleeding past prime time, the market that was there in 2020 is not there now, especially in a consolidated market. Trading now is really a game of discipline, and the men and women that are most disciplined are going to be able to win the most. And I need you to know that silence is a superpower and the second best indicator. Time is the first. So I know some of you want to learn in group format and have accountability buddies and all that. I'm telling you. And I asked a brother today, and I asked somebody in Stock Club, I'm like, I've made some of you $1 million out of Stock Club. Have any of you that have made a big amount of money in Stock Club sent me a check for half? And the thing with accountability partners is if they cause you to lose half, they're not going to cover your losses. Silence is a superpower because you get to go through more material, review more, and that's the way you're going to end up developing your edge. If your discipline is low, use a higher time frame to trade off of, like a 4-hour chart. But if your discipline is higher and you're only sticking to 6 to 8 trades per week, no matter what, you can use a lower time frame, like the 20-minute. This is an exclusive 40-second chart, or you can use Renko, Dream Team. I'll go through how to use Renko, but you already know. And shout out to Jamal, who, even though I looked at the time frame before, I'm gonna give you credit because you brought it last week. That time frame is fire. What are your thoughts on the inflation story? My main thought is it's the number one reason why people should invest. Everything is getting more expensive. We've seen that throughout history. The value of the dollar drops every year in comparison. You need to put your money into things that are going to make you more money babies while you sleep, because things are going to constantly change. And that's why I always tell you, you have to know what your freedom number is, not just for when you're 58 or 63 or 70, but you need to know that number so you have something to work towards every single day. Because when disaster strikes, and disaster comes, is not at the most convenient time. Have you ever noticed financial emergencies come frequently when you have no money? The inflation story won't be important. Just like last year, everyone was like, yo, are we in a V recovery or a W or U? None of it matters. Invest in them all. I'll tell you the same thing. The inflation story won't matter in 2 years. But if you put money into the market, it definitely will. We don't want to overtrade, but we want to perfect our edge. How do we consolidate the two approaches? 300 practice trades. When you go live, only 8 trades maximum per week. And then you need to know, in order to hit your goal, how many trades do you need for the year? Will there be moments in which you may have a flash crash, or you may have an incident like where oil goes negative and you may be able to short it? Yes. Will we have an episode like Brexit or August 24, 2015 that I talk about? Yes. You may want to add some trades there. For those of you that are in the sniper program and dream team, you may want to actively trade the natural gas report and crude report so you get more comfortable trading volatile sessions. That's why I always told everyone, practice the NASDAQ, because if all hell breaks loose, the Dow, ES, Russell, EMD, the Nikkei, Japanese yen will all move in that same kind of speed. You have to practice with that kind of pace first. But regardless of what the desire is, once you're trading live, you have to stick to your number of trades for the year. What are my thoughts on Doge and Shibu? I give prices towards the end of the episode. But here's a site where you can know what people are buying from that I've not talked about before. Write this down: wallmine.com. Wallmine.com. I have no affiliation with, but I played around on the site for a couple hours and I liked it a lot. Nvidia is up 167% since the launch of the stock club of last year. So even though AMD is having some issues in terms of supply, and a lot of places are having supply chain issues, Nvidia has done incredibly well. And anybody who's a gamer understands how important Nvidia is to the ecosystem. Even with everything that you know, do you still make mistakes in investing and trading? Absolutely. I would argue when investing, no one can ever be right 100%. If you get in a good trade, you never put on enough size or enough shares. If you are in a negative position, you put on too much. In trading, I mean, there's always hundreds of mistakes, because when I'm looking at 16 assets in total, I'm always missing a move on something. And consider this: if you trade like a 4 hour, 1 hour, let's say 20 minute, 10 minute, and 1 minute, which 1 minute is absolutely horrible. So don't use that. At some point on some time frame, I'm going to miss a move. Now multiply those number of time frames times 16 assets and look at all the possibilities in which I could have missed a move. There's always mistakes that are made. That's why you have to know what your numbers are, so you can have some kind of peace and solace in knowing, okay, this is my benchmark. I hit it. Here's where I could have improved. But never, even in 2020, I did fantastic in the stocks that I invested in. I could argue that I probably should have invested. Truth be told, I should have went negative and invested in terms of debt to investment ratio. I probably should have borrowed. I should have put every dollar that I had into the market and probably borrowed 500,000 and put into the market. You make the assessment about risk parameters. I get it, but hindsight is always 2020. Like, you can drive yourself crazy at the things that you missed. And that's why I always say, like, I hate that I missed Novavax and Overstock. Like, I did great on Moderna. Kudos to everybody in Stock Club who's in Moderna. I'm in Shopify, in Tesla early, like, but there are still things that you missed out on. How often do you review your recorded trades? Once a week, normally on Fridays or Saturdays. You should do the same. What are your thoughts on Intel and Ford? Ford, I don't love the electric truck. I think is amazing. I think Intel is probably a third or fourth best player in the space. They've made a tremendous comeback, but most of that comeback is from people missing out on AMD and Nvidia and TSM. I lost on PBI. What do you think about the fundamentals and the technicals? I need to know more about this, but Pitney Bowes, I would tell you this from seeing your comment, brother. I would stay away from as many message boards, Telegram, Discords as possible. I would make a watch list from them, but I wouldn't have anyone else tell me when I should get in. You have to be able to do your own fundamental analysis and technicals and make sure they match. But Pitney Bowes for the longest time have been dropping. It's not a good company overall to invest in long term. And this is the secret as we wrap up. You should invest 50% of your money and use the other 50% for expenses And let's call this a silver standard level of personal finance 101. But if you want to go Super Saiyan and go crazy, you should invest 90% of your money and use the other 10 for expenses. That when that lifestyle creep comes in, I know we all want to look good. We want to look, attractive to the opposite sex and all that. Like, there's a lot of reasons in terms of ego as men, while a lot of people invest in depreciating assets or liabilities. But to have the true freedom that you want, once you have a model that works, you should put 90% of your money into it, at least for a couple years. And I posted this in 2017. Harry Dent has a book called The Sale of a Lifetime. And a great part of this is he has a system based on cycles, and all 4 of the cycles pointed down in 2017, which predicted the 2020 crash. I know people always tell you can't predict the market. I've shown here for a year and some change that you can. But go look at the assets and the people that, and now Harry's been wrong on other stuff, but you need to look at every source of information if someone is telling you that a crash could come. And it's not a reason to get out, but also if you know a crash is coming, write this down. It is an opportunity to buy great companies at super cheap prices. When companies in like the S&P and NASDAQ make all-time highs, that's when you need to go look at the prices you'll buy if everything falls apart. Not when it's in a down cycle. It is too intimidating during a down cycle to do it then. How do you invest in a company like Microsoft that doesn't have deep dips? This is a great question. You need to go look at the weekly chart, mark off where you would get in, look at the daily chart, look at where you would get in, and then if you don't have a move there, go to the 4-hour. If you're using any combination of EMAs, let's say 200, 150, 72, 20, it's going to drop to one of those spots. I wish I can give y'all my crystal ball, but I haven't. If you think I should turn a crystal ball into an app, put yes in chat. But that's the way you're going to be able to build your positions. And even if you get in off a 4-hour and you're looking to hold it for 7 years, 5 years, you'll be golden. Remember on the episode with Mark Cuban, he said he's only investing in companies with great AI. So Microsoft, Apple, Google, Netflix, those are all examples. I want you to make a watch list of 10. Just Google technology companies with great AI or artificial intelligence, right? And then you can make a watch list for 10 of the ones that you like the most to invest in for the long term. Cybersecurity will become even more important. And also, if they begin to store DNA on hard drives, as we talked about, the bio warfare and things that could happen poses a considerable threat. So you got to add cyber, CIBR, to your watch list. Hack. And of course, last year when Trap was on, he mentioned CrowdStrike, which is probably one of the most important in the space, hands down. And Cuban also in the episode stated to read 5 hours per day. I'm telling you, it is an edge. Some of you have been asking me if I don't like to read and I can't go through 5 hours, what should you do? I will go through 10 chapters a day on Audible. I would definitely do that. And this is the final lesson that I want to teach you. Learning is more important than teaching. Having a monopoly is more important and better than having competition. And systems and automation trumps everything. Systemize your process for how you're going to invest in the market so you can have your edge. And I saw this from John Carlton this weekend, and I thought it was important to point out. And he says it's a myth that working hard will get you anywhere. It's working smart according to what your creative brain requires that makes magic happen. Life should be enjoyed. Money merely supports that essential premise. And we've talked about the golden rules of retirement, like only working 4 hours, spending 4 hours with your friends and spending time with your family, only being around the people and things that you love the most. You have to have systems and automation. So you want to work hard at first to build your automations and to know the systems that you need in place. And then you want to begin to automate them as much as possible. I want to say this lastly. I love you dearly. I want to see you succeed. I want to see you win. Investing is easy if you follow a plan such as 2 index, 2 tech, and just add to them and don't touch. I would also even say you probably should only look at your portfolio once every 3 months if you're not disciplined. I keep telling you, a lot of you got tricked into trading and doing more risky things. Does risk have a place? Yes. Only allocate 10% of your capital for anything risky. Put it in chat, because I don't want anybody to say I didn't say it. Only 10% of your capital should go into risky assets. Because what happens is you'll get a win, and then you take all of your money out of your long-term investing. You put it all on the risky asset. And if any of you have gambled or been to Vegas or been at a casino, you know you really need to stick to around maybe three hands at the table and then walk away. But some of you are getting in on a fourth and fifth move, and then the run is over, and then you're destroying your financial future. Don't do that. I want to see you win. I love you. There is nothing else to teach. Execute, to index, to tech, buy every month, buy a whole bunch of shares. If you're not a better executive than the people that run these companies, let the greatest CEOs that have ever walked the earth work for you. And if your company isn't better than a company that you're comparing your portfolio to, invest with them.